Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which clearly is in a strong monthly uptrend. The market has been creating a series of monthly higher highs and higher lows starting from here. So this uptrend is still intact from a market structure perspective, with the market still being in the process of creating new all-time highs as I'm currently speaking. We can notice how we had a new higher high here, the previous one was here, and the one before that was exactly here. So from this moment here, when the market essentially created this new higher high and breakout to the upside, the market has been ripping to the upside, creating higher highs and also higher lows, as we can easily identify. Now, this breakout to the upside has triggered this massive rally, also because it was a breakout away from a strong historical structure level. In fact, what we know is that this zone here was already acting as previous resistance, preceding all these rejections to the downside, and then the market broke out to the upside from this level. And what we know is that after a breakout to the upside, all the previous resistance became support here. So when the market went and retested the previous resistance turn support, there is an increased probability that we did see institutional longing inside of this area. We will be speaking about institutional longing in just a few minutes when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is very clear as well. We can see a massive impulse, then we're starting to see this horizontal price action being created. But if we look closely, we can actually see that it wasn't really horizontal price action. It was actually a consolidation pattern, which is a quite popular one, which is a wedge or triangle formation, depending on how you want to call it. But the base principle here is that you are having the creation of lower highs and higher lows at the exact same time. So essentially the market is converging in the same point, and at some point there will be the breakout to the upside. This is a very popular pattern, essentially impulse, consolidation in the form of a triangle formation, and then breakout to the upside. Exactly what the market just gave us. So also here on the weekly time frame, everything seems quite bullish, and more bullish price action could be expected away from this level. Now, dropping down on the daily time frame, what do we see? Now here on the daily, I did speak about gold just a few days ago when the market was around this area. And I made a full breakdown explaining all the reasons for which I expected this rejection to the upside, which is in fact exactly what the market did. The market just completed this daily impulse correction and impulse pattern to the upside. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. We can also notice that as we have an impulse and a correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have a 0.618 and 0.786 Fibonacci retracements, both lining up exactly at this area, therefore creating confluence of support at this zone. And in a confluence of support area, there is an increased probability of seeing a potential rejection to the upside away from the area. However, what we can also notice is that in creating this rejection to the upside, the market is also printing this overextended W formation. And after the creation of an overextended W, what you would expect at some point is a rejection to the downside and for the market to create a correction away from this zone, especially if institutions are now starting to short gold around this area because they consider it as well overextended to the upside. So let's go and see what we have when it comes to the commitment of traders and what the big players in the market are doing on gold. Now, if we check here, we can see how with the last reports, net positions have now been decreased. We went from having 257.9k net positions down to 249.7k net positions. So we had a clear decrease of net positioning with 3,000 shorts added just with the last report and 5,000 longs getting closed. So it seems like institutions just with the last report have started once again adding shorts and closing longs, which clearly can make gold weaker, increasing the probabilities of a potential correction to the downside away from this area and away from this overextended to the upside market. So let's keep all of this in mind and put it together. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now back to the analysis. So as I was saying, let's put all of this together. In a situation where there is an overextended market, on the daily time frame, we have an overextended W. However, the overall uptrend is bullish, so even a correction potentially could lead then to more bullish continuation, and institutions are now starting to short. In this kind of situation, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised, especially if we see more institutional shorting, to see a potential short-term correction to the downside away from this area. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.